A lot has already been said about the Lenskart IPO. 70,000 crores valuation, the 235 times PE ratio, a net profit in the latest year due to only a one-time accounting adjustment. Also, founder Peyush Bansal famously argued that his role as an entrepreneur is to create value for the customers and not to set or justify the valuations, which he said should be decided by the market forces. These things have already drawn a lot of criticism against him on the internet. But here's what Peyush had to say in his defense. We saw all his recent podcasts and interviews. Here's a compilation of what he has to say. Firstly, he says that Lenskart is not a retail company. They are a tech company. According to him, operating leverage has finally kicked in, which means that profits are now growing faster than the revenue. Also, the company's EBITDA CAGR over the last 3 years is around 90%. Secondly, he claims that IPO isn't overpriced because it is based on enterprise value to EBITDA ratio and not just the earnings. And in his words, the multiple is actually one of the lowest for a profitable consumer tech company. Thirdly, this IPO isn't an exit. No one is completely cashing out. All the existing investors, including the global funds, are staying and have participated in the anchor investor rounds. Peyush calls it the beginning of a new chapter and not the end of one. Fourth, he highlights that Lenskart has been EBITDA profitable for over 3 years and has turned PBT positive this year, something very few Indian consumer tech players can claim. Fifth, he reminds everyone that valuation is set by the investors and not the founders. He said that the final price came after feedback from domestic mutual funds and global long-term investors and not some guesswork. And finally, they are betting on the future. They plan to expand from 2,800 stores currently to 4,000 stores in the future. Also, they will scale the eye tests from 16 million to 100 million. And they are also working on developing smart glasses with Qualcomm that can do everything from UPI payments to health tracking. And everything will be made in India. For him, that's the real vision, not just the eyewear sales, but a whole new tech ecosystem. So Peyush's stance is simple. You are not buying an eyewear brand, but you are buying a profitable tech company with big ambitions. Though we will stay out at these valuations, but do drop your views in the comments and whether you are applying after Peyush's comments. If you enjoy our content, do follow the Market Scan. And if you want this amazing daily PDF on WhatsApp covering all major Indian and global market updates, check the link in bio. It is super affordable and the easiest way to track the markets daily.